Are you frustrated with watching a large chunk of your hard earned income disappear into taxes? Do you wish there was a way to keep more of your money and build wealth faster? Then this is the episode for you. I had the extreme pleasure of talking with Kyle Ewing, who is a high earning corporate professional. She's a Libra, happens to share the exact same birthday with me, and she's one of my favorite humans on the planet. Initially, her number one desire and reason to invest in real estate was because she was looking for some tax relief. And she ended up finding a lot more than just that. She not only received a check back from the IRS for the first time in a long time, but she also found something that she was very passionate about. Tune in as we uncover what she did and how you can do it too and put more money back in your pocket where it belongs. You're listening to Passive Real Estate Investing for Her, where smart women make smart investments. Let's take the overwhelm out of real estate investing. I'm Melissa Nash, a seasoned investor, wife, and a mom of four who built a secure future through real estate while juggling a busy family life. My mission is simple: to show you how to easily invest in real estate so you can confidently build wealth for more security, time, and freedom. So if you're ready to create the life you've always dreamed of, stick around. Let's do this. Welcome, Kyle. I am so excited to have you here.
Yes, I'm so excited to be here.
We have a really exciting interview today. Kyle Ewing is not only one of my favorite investors that I've worked with, but she is a longtime bestie of mine. We go back to the high school days and we happen to share the exact same birthday.
Birthday twins.
Ah, okay, Kyle. The reason why I'm so excited to talk to you slash interview you for this podcast today is because I think your story will resonate with a lot of people. I'm just going to give a quick background if you don't mind, and then you can catch me up and kind of fill in what I might have missed. Because I want everybody to kind of get the um your reasonings for investing in real estate. So Kyle is a longtime career girl, and she's worked her way up to a corporate position in San Francisco. And as a high income earner, you are always like, hey, I pay a lot of taxes. In fact, I remember one year, I think we were in Cabo, Kyle, and for some reason, you had just written a check to the IRS or something. And I remember just being like, what? You are paying that much in taxes? I couldn't get over that. And so that was where I'm coming from today. But before we dive into all of that, will you just tell us a little bit about yourself, what you've been doing for the last, 10, 15 years, and then we can get into all the nitty gritty stuff.
Yeah, I've been living in the Bay Area since college, what feels like about 100 years ago. I've worked in the tech industry in an HR recruiting type of role. So, one of the challenges that we talked about, and I think we were sitting there in Cabo and I was writing a big check because there was always something. I always missed something when it came to taxes each year, primarily driven by a lot of just stock-based compensation I was getting. So even if I wasn't like selling the stock, it was coming on this consistent pace and I wasn't withholding enough. And you had mentioned, hey, we got to get you some real estate investing that can really help minimize your tax liability. And I wasn't convinced. Like I just wasn't convinced that it would work for me because of where I was. I'm glad that you pushed the conversation because it did end up we were able to in just a couple of years time we were really able to flip the bit completely to where I think 2 years ago was the first time ever I got a check from the IRS. So it wasn't about me owing. So that was a big, big win for me.
Oh my gosh, I remember that day. And I think I was so happy for you. But then in my mind, I was like, this is a pretty big deal. How many more people out there are sitting in the exact same situation as you? And these are the things that we were not taught in school, right? This is
Right.
stuff we have to figure out on our own. We have to seek it. And these are truly the tricks and the secrets to how the rich get wealthier in our country, how we have generational wealth with the wealthiest families. They've been doing this for generations.
Right. And I mean, I think it's important also, you need to consult with your tax professional. I think I had to get through a few folks before I even found someone who understood what it was that I was proposing based on the guidance you offered, because it isn't conventional, because not everybody does know about it. So I had to actually find a few people until I found someone who was like, oh, yeah, I know exactly what you're saying. And this is how we can do it.
Yeah, and let's just dive into that because I remember one of the first real estate events I convinced you to go to, I remember
Yep.
it was in San Francisco
Yeah.
and we had a great turnout. We had some speakers lined up. I had a tax strategist that was there.
Yep.
And I think for everybody listening, there's a difference between a tax strategist and just a CPA or an accountant or somebody that is doing your taxes. So, do you remember, Kyle? I personally ended up working with this tax strategist. I know you had a conversation with her. Is that the first conversation you had with the tax strategist, or where did it start and where did that go to?
Yeah, I think that conversation gave me some of the like vocabulary that I needed and some of the terms for me to look into on my own before I then went to my financial advisor and said, I need to get a new tax person because I'd already talked to my original tax guy about it. But to your point, his job was simply punching in numbers and telling me who to write the check to. And so there was no strategy happening. And to be fair, like that wasn't his job. My expectations were not fair of what I wanted him to do. So when I talked to the tax strategist at that event in San Francisco, it just prompted me down a different path to where I then got reconnected to someone else who helped me understand if you were to purchase, you know, a property or two. And actually, we can dig into this, I think, a little bit, but it was the minimizing my tax liability was the probably like number one reason I wanted to get involved. But there were other things too. So even if I wasn't going to get the tax savings that I did end up getting, I would have still probably invested from a passive income perspective. I personally find it fulfilling to like host people and decorate places, so there was these other reasons too, but the tax piece was the clincher.
Yeah, and I'm so glad that you brought that up because in my world as a real estate coach for over 10 years now, usually the first thing that people talk about when we start talking about real estate is cash flow. And you see like all these gurus on TV and they're driving the Lamborghinis and everybody's like, I made this much in cash flow. And that's like
Yeah.
I think you get a lot of attention for that. People are like, oh, whoa, what is that? So that's usually the
Yeah.
first thing you hear. Then, actually, taxes is one of the last things that people even realize that there's a benefit to real estate. So we actually flipped it and started from, okay, how can I save in taxes? Because when you're not writing a check to the IRS, I mean, that's nice because now you've got money
Yeah.
that you can reinvest. But then all of a sudden we have these other things like real estate is building wealth. And then we've got the cash flow is obviously an amazing benefit as well. And then the tenant is literally paying down your mortgage for you. So there's so many amazing things. Okay, before we go into, because you kind of hinted a little bit, you said, I love hosting. So, surprise everybody. One of her properties is a short term rental, which we're going to talk about. But before we talk about the short term rental, let's back up and give everybody the background of what was going on around this time. So, initially, when you decided that you wanted to invest in real estate and there might be some benefits for you, we talked about professional real estate status, so let's touch on that really quickly, and then I wanna dive into what transpired after that. So can you fill us all in what
Yeah.
professional real estate status is and how you guys made that work for you and your partner?
Yeah. And I think that can be a little bit tricky, but what worked out really well for us. So both my husband and I, at the beginning of 2020, both my husband and I were W-2 employees. So, I had my job. He was working on tugboat. At that time, we didn't even own an investment property. We had our primary home and we had like a vacation house for ourselves. So then, of course, 2020 happened. Husband stopped working in a more traditional capacity. So he was no longer getting a W 2. We decided also during 2020 to buy an investment property, short term rental to start. That didn't happen until 2021, but we were in a really good spot to work toward professional real estate status because my husband was not employed. He was not collecting, he wasn't a W-2 employee. So in order to qualify for that status, we bought a short-term rental. We also ended up renting out what was previously our primary home because we moved into the vacation home during COVID. So we had a long-term rental and a short-term rental. And in order to qualify for professional real estate status, my husband needed to demonstrate that he was spending 15 hours a week, like consistently for the year, on managing these properties. So he tracked his time in an app. It was just like a hourly timekeeper app. We had the receipts from everything, mileage, driving and checking on the places, like all of the things that he did. And we were looking to expand our portfolio. So even the time that he spent or that we would spend together looking at other houses, going to open houses, talking to Melissa to get guidance, feedback, advice, all of these things were counting toward his status that he needed. So he has been able to qualify professional real estate status since 2022. So for the last 2 years of filing taxes, he's been able to do that, which allows us to deduct any losses from our properties, particularly those first like startup costs and things like that, from my W-2 income. Does that make sense? Did I say that right, Melissa?
And absolutely. And to confirm what you said, so professional real estate status is like the golden ticket that everybody wants. And the reason why, it's actually something you claim for yourself. Nobody gives it to you. But like Kyle said, you have to have a certain hours, and that adds up to about 15 hours a week throughout the whole year. And so once you think you can have those hours or you have them, then all of a sudden on your taxes, you tell whoever's preparing your taxes for you and say, hey, I am now professional real estate status. And when you have that, it means that now you can deduct all the real estate off of your taxes. And let me back that up. The IRS caps you at a certain income level and says, okay, you make enough money. We're not going to allow you this year. It says, okay, we're not going to allow you to take off these deductions because you make too much, is basically what that is. And so the professional real estate status comes in and it says it doesn't matter how much you make. If you have that status, you can now write off everything that has to do with real estate. And so that's why everybody wants it. Now, you can't have it if you have a W-2. However, if you're married, one of your spouses, if they do not have a W-2, now all of a sudden that person can claim it, whoever doesn't have the W-2. And then now, since you file your taxes jointly, that gets carried over. So that's how Kyle got to benefit being a high income earner with professional real estate status. How does that,
Yes.
how did that sound?
Yep. Yep. That's exactly right.
Perfect. Okay. So you guys actually got those hours pretty quickly.
Yeah, it was easy enough. Like, it was very important for my husband to be tracking that in this little app. And it was just a few hours a day, just tracking what he was doing. So that first year of owning the property, we were able to qualify for professional real estate status on our taxes that year.
Okay, so to give a little bit of background, so basically, this is when around that time, 2020, the world was shutting down. And you
Right.
just mentioned, so you guys had bought, I remember initially when you guys bought that vacation home, you thought in the back of your mind, this might be the perfect house that we do a short term rental with. And then,
Yes,
right?
until it became our home. Yes.
Yeah, yeah. Because then when the world shut down and you went remote, you went, why am I sitting here in San Francisco when we can be in beautiful trees, right?
Yeah, exactly.
So now you move to that house, you're in it full time. Then you decided to turn your San Francisco house into a long term rental, right?
Right. Yep. And it was easy for us to we turned it into a furnished long-term rental. San Francisco is really tricky with short-term rentals. You can't do them unless it's your primary residence, and then you're limited to, I think it's 90 days a year. It's really complicated. So we ended up just renting it out fully furnished. And that's actually worked out really well for us the last few years.
And so now he's able to include those hours in professional real
Yeah,
estate status because he's managing it himself. You guys are doing it. You don't have a property manager, you're doing it. So it's considered active investing as well.
that's right.
So now Melissa is sitting here trying to do everything she can to get Kyle to buy a short term rental. A little selfishly, I was hoping you would buy one near one of my short-term rentals. I think I was like, "Let's someday I'll retire together." That was my kind of a little bit selfish move trying to push you to do that.
I was happy about that. I had
Okay.
FOMO. I know, it was like number 1, minimize tax liability. Number 2, passive income. Number 3, FOMO. Those were my reasons for investing.
Well, and also, so to tell our listeners what was going on with myself at that time. So I think I was on maybe short-term rental, I think number 2. We were in the middle of renovating that second cabin when COVID shutdown happened. And I was shopping for the house and I was decorating the house and I was, hey, asking Kyle, like, what do you think about this? And what do you like about this flooring? Or what about this couch? And I was having a lot of fun getting that going. And then I did the Airbnb thing on that property. And then I think I was clearly so excited about it. It was going well. I was learning a lot, learning how to manage it myself. And then I was having a lot of joy in it, a surprising amount of joy in it. And then I was sharing the numbers with you. And then I went and then I was on property number 3 right away. And then again, we were doing a light remodel on that one. I was decorating and sending you photos and color schemes and all the things. And I
Yes.
think that's also where you were like, that looks kind of fun. Like, do I want to do
Yeah.
that?
Yes. I was like, oh, the creative outlet aspect was very appealing to me. And just, yeah, having something to create and then thinking about the fact that was ultimately like an asset that would pay for itself and generate income and be a really fun place for people that I didn't even know to enjoy a holiday or enjoy a long weekend. So to me, that was like a real win-win moment. Like it scratched all of the things.
Yeah. So, okay. So let's talk about that because actually, your reaction to hosting, I tell this to people often because you didn't expect to enjoy hosting as much as you did. Do you wanna talk about that a little bit?
Yeah, like I think at first I was very pragmatic about it and it was very transactional in my head. Yay, like these people need something and I have what they need or what they want and there'll be an exchange of money and all good. But I ended up finding that I loved finding out more about why these people were coming to the mountains and what did they want to experience and oh here's my tips on all the things and I took a lot of care to create a space that I wanted to spend time in, that I wanted my friends and family to spend time in. So I found it very gratifying when I'd hear that people had the best weekend or that they wanted to know where I got the pillows or these were really great dishes, these kind of things. It was very gratifying for me and it was something that was I was accumulating wealth in the form of this asset and I was generating cash flow. And so it was smart and it felt good. And I don't, that's not always the case, right? Like I invest in the stock market. I'm not like feeling great about it. Does it go up? Does it go down? But there's no like emotional connection there. So this was a unique opportunity I found that I could like very clearly see the impact financially, but I was also feeling something emotionally and that felt really good to me.
Yeah, and I've relayed that story to a lot of people because I was similar to you where I was looking at it as all checking the boxes, business decision. Yes, the design stuff was fun, but I also was very surprised at how nice it was. And so it's been very, very fulfilling to know that somebody saved up for a year. That was their family vacation
Yeah.
to be able to provide that. I've had some very interesting hosting experiences where somebody experienced the loss of a family member. They got the news while they were at one of my houses.
Oh, God.
And yeah, like life-changing moments, and they said how grateful they
Oh,
were in the mountains, and to get that news in such a peaceful place was wow. And I've hosted honeymoons, birthday parties. A lot of moments are created in these houses. It is gratifying to be a part of something.
yeah, I love that. And it's really funny because when we first bought the place and we spent like a couple solid weeks out there getting it set up, getting it turned into like this, cool place. And then we left and we handed it over to like all these different guests that were coming in and out. I think it was about like 9 or 10 months until Scott and I went back to spend like a long weekend ourselves and check in. How are things holding up? And it was wild to me. Like the whole energy of the place felt different in a great way. Like it went from this like kind of sterile void, like transactional place to like, oh my gosh, like all of these people have been coming here for the last 9, 10 months and celebrating, enjoying each other's space, creating memories. And you can feel that. We now love going to the place. I love reading through the guest book. I love just the whole vibe of it is so different because so many people have had such great experiences there. And I think that's really, really cool.
Yeah, I cannot agree with you more. And I'm so glad that you said that. And it really shows too the love that you put into a place. I think there's a lot of transactional Airbnbs out there that are very sterile. There's not a lot of personality. There's like, I went to IKEA and I bought the couch and I
Right.
bought the framed art that they sold there. And just the personal touches, I think, too, that you've added to your property, the hand picked mug that says the mountains are calling or whatever. You very personally curated. So there's a couple things that I want to go back and talk about. First of all, I'm going to tease everybody. We're still talking about taxes, and we are going to get to
Yeah.
the number one thing that really solidified you being able to get a tax refund. I want to come back to that because I want to go back to the short-term rental. So people have a choice when you bought the house, you decorated it, and at that point you can go, okay, I'm going to turn this over to a property manager, whether it be a local property manager or there's companies like Evolve that are the big national companies, but you decided to manage it yourself from long distance while you had a full-time, very stressful corporate job. Even though you were working online, you were still logging in the hours. You had the stress. Like there wasn't a lot of downtime for you. So, what made you do that? Walk us through how all that kind of transpired.
It's probably a couple of different things. Like one, I did have comfort knowing that like you had a couple places there. We have another good friend who has a property there, and you guys are a couple hours away. So I felt personally like a bit of comfort. Like in the worst case scenario, someone could go and put eyes on the place if needed. Now, that said, I don't think you've ever necessarily needed to do anything like that for me. So we also made sure that we built a strong team. We've got this other kind of short term rental group on the mountain that we can share resources with. When it starts to get snowy, do we have people lined up to make sure that we're plowing? Do we have the firewood? Do we have all of these things? So I feel really confident in the crew that I've built. Even just there's those few kind of like emergency folks on hand that can just do anything in a pinch. And so if and when something goes down, I feel really good that I've got someone there because yeah, I'm an 8, 9 hour drive away. So me being hands-on is not possible, but I feel confident in the people that we've surrounded ourselves with that can help get things done. And also there's a control aspect too. Because I put so much into the place, I didn't want to just hand the keys over to someone. And I didn't really trust anyone else to make it, you know, feel as cute or look as good as the way that I wanted to. So and then there was also like a financial decision. It is obviously a lot cheaper not to pay someone 30% to look after your place. So that was my thought process.
Yeah. So putting together, I call this your dream team. This is the term that I use in the short term rental course that I help students through that. So we call it your dream team. And one of the steps that you do in that program, and I walked you through that, is where you run through every worst case scenario that could happen in a property. One exercise that I do is I literally write down, okay, what if something happens, a pipe burst, air conditioning, cleaning, obviously, handyman, the hot tub.
Yep.
A lot of us have hot tubs up there. You run through, okay, what if the hot tub goes down? What if this happens? What if this happens? What if this happens? And then you start to build a person or multiple people that would fit that role. So, obviously, in the mountains, snow removal is important. Other than that, I would personally say your house cleaner, housekeeping is the most essential person that you could get. I mean, for a day to day basis.
Oh yeah. I completely agree. Like that's yeah, they are the ones. It requires some hands-on in the beginning just to make sure you're on the same page of like, how do you want the towels or like, how many towels are you leaving? There's those kind of things. But then once you get them dialed in, I think that they're probably one of, if not the most critical
Hmm.
aspects of running a short-term rental from afar. They
Right.
kind of act as your eyes on the ground.
Yep, absolutely. One of the things that Kyle and I have done at our houses to help with that with the cleaners is once you get your property set up, how you want it to be, it's staged, you've got the photos. Then what we do is we go through and we create a book for the cleaners, a visual book.
Yeah.
And some of them want it digital, some of them want it printed. I have both. I have it printed out and it's in the cleaning closet. A couple things, there's a checklist that you can have that the cleaners can go through every clean that they're going to do the basics. And then there's also photos to back up everything else. So you go, we want to leave out, two towels per guest. And this is where we want the towels to be. And this is generally how it should be organized, or this is how they should be folded. Some short-term rentals will put the towels on the bed. And so whatever your preference is, that's all it is, just preference of the host. But that's one good way of communicating that to your cleaners. To me, it says to your cleaner, like, hey, I really do care. This is a big deal to me. I think it sets that standard a little bit.
Yeah, I agree. Like you said, it's preference, but just being really clear up front on your preference, and then they can just keep on holding that level.
Yeah, definitely. Okay, so before we go into some of the other stuff, I want to talk about the tax benefits that, again, I'm going to tease
Yep.
everybody with it, how you got that check back from the IRS. But just talking about the short-term rental, do you have any stories that you might have a little bit of advice, that something that happened that you're like, okay, that was not good, or a funny story or something you can think of off the top of your head where you can go, okay, that was lesson learned, let's not let that happen again.
Oof. I mean, of course, the first thing I'm thinking of was the Snowmageddon situation, but that was, we had a epic like century record of a snowstorm up on the mountain, and people were different levels of prepared, right? So that's one thing. It's you can encourage people, hey, we're expecting a lot of snow. Make sure you're ready for XYZ. Like I think going forward, and in fact, I think last year we had this conversation when it looks like it might be another epic snowstorm, maybe we just cancel proactively guests. Like
Yep.
maybe I don't want to actually deal with someone like we have a vintage mom gas fireplace that there's central heat. There was no concern of these people being like freezing to death, but they chose to look all around the house and start burning like my decor in a gas fireplace because they were panicking.
Oh my
So it's kind of
gosh.
like, what? I think going forward, I wouldn't just trust people, particularly because we're really close to Los Angeles and people just don't always have experience with the elements in that way. So I would probably just look at upcoming potential natural disasters and make the call that it's not worth having someone there that might not know how to handle it. The other thing is like silly things like, oh, we've during the holidays, power goes out, or someone blew a breaker because they had space heaters and they were using the microwave and they were not clear on how to, like, just basic things like how does anyone use a breaker box? Like you forget, oh wow, not everyone has experienced this. So then we just wrote detailed instructions for if you blow a fuse, here's how you look at breakers and here's how it might look if one is tripped, because we're walking people through that on the phone and that can be challenging. So sometimes you have to go through that first weird thing to then document it for the next person so it doesn't become another thing.
Right. That's absolutely genius. Every time that you experience something new outside of what you even thought, I cannot tell you how many times I had to explain to people how to make a fire. And in fact, I was like, maybe we shouldn't be doing fires at all. If you don't know
Right.
how to do a fire, maybe that's a big red flag that you shouldn't be doing one. But yeah, I finally did the same thing as you, like step by step. You put the kindling in. If you build a fire like this, it needs the oxygen, all
Right.
the things that we may or may not know how to do ourselves. So that's really great advice. So you're self managing it now. And I know, because not only have I put together a lot of my own short-term rentals, and I've helped some of my clients and people like you. In the beginning, it is a lot of work setting it up, right? We're building our dream team, we're setting up the house, we're setting up the Airbnb website, we're setting up all the things to automate. The number one goal is to automate it, because again, the goal for this is not, you are not trying to create a second job for yourself. You're not like,
Right.
hey, I want to do this full time and leave my corporate job. This was always passive for you.
Right.
So, just really quickly, what are some of the things that you have set up so that you can be passive? And where is your biggest time being spent right now? And actually, I'll follow up with that. Like, how much time are you spending on this short term rental on a weekly or daily basis?
So I feel pretty well dialed in with all of my tools. The biggest one is just simply having the auto responses or templates set up. And I use Airbnb exclusively. It's something I just haven't looked into other platforms, but for me, that platform has I've got it dialed in. So I feel quite good about that. I guess I do use something separate for pricing. That's a different type of thing. But again, I check it every now and again if I just want to see if I need to refresh the inputs to make sure that they're dynamically updating my prices as makes the most sense. But the templates has been great because you want to make sure you're responding quickly. I tend to, it's funny, there's certain ones I don't automate. So when somebody books, I don't have an automatic one personally. I like to see what they've said about why they're coming. So then I like to respond. I have a template, but then I just change it. Oh, so happy you're going to come here to spend your birthday weekend. What a great place to enjoy a new year, whatever. I always like that first one to be a little bit personalized, but you don't need to do that. And then every other communication is pretty much automated, like sending out the check-in information a couple days before. If it's winter, they're going to get winter reminders a day before. Once they get there, we've got a bear problem. So the day of check-in, they get a note about don't leave your trash out. The bears are going to make a whole mess of it. That usually gets a lot of interesting responses because people are like, wait, bears? What? And then check in the day after they've checked in the morning and make sure they're cool. So that's all dialed in. We spend very little time and that the response is really positive. Like people actually like being checked in with. That's great. And then honestly, like I spend very little time. I'll just go through, oh gosh, it looks like I've got some openings. Right now we're winding down on summer. So it's not surprising that I'm not quite as booked as I would have been throughout the summer. So I might go in and make some tweaks, or maybe I'll go in and make some sales, do a little discount on the nightly rate and see where that gets me. But we've got it automated so well. And my cleaner tells me when I need to order all the new things. So that's great. Like with just when she tells me we need more snacks or wine or paper goods or dish soap or whatever it is, I might spend literally 3 hours a month on things. It's nothing.
Amazing. Yeah, once you put in that hard work and set everything up correctly, like you said, the pricing tools, the automation tools, and automating too is I think that is where you're going to save the most time on the messaging side because
Yeah.
number one, the way we set up your listing, Kyle, is you're communicating your expectations from the very beginning. The minute they click on your listing, right? We're setting the expectation. This is who would be perfect for this property, and this is why. And so they're automatically going to eliminate themselves from that booking or keep looking. They're going to go somewhere else because it's not fitting, or it
Right.
is going to be a good match for them. So you're answering all their questions there. That's why your listing is so important, how you communicate. Then the minute they book, you're showing your customer service by saying, thank you for booking, you're coming for your birthday, whatever message you have in there. And then we're very specific about your messages after that. Okay, here are the instructions, plain and simple. Here's how to use the property. Here's how to get to the property. Here's how to get into the property. Here are the rules. Then, once again, you're giving them everything that they need so they don't have to check in with you during their stay. Because I think that's the biggest thing that I hear from people is they go, oh, I don't want to be sitting there answering all their questions. I don't want, I want to be able to turn my phone off and go out to dinner with my family. And I don't want to be worrying about my guest. But if you set it all up correctly from the beginning, all of those answers are being taken care of from the minute they click on your listing all the way through the day that they leave. And then you even have an automation that you can set up after they leave where you're thanking them and showing your appreciation to them as a guest. And so there's very thought out communication all the way through. So that's
Yeah.
how you are able to work so little on your property.
Oh, yeah, exactly. Yeah, there was some initial kind of investment of time to get things settled and sorted. And even I realized there's a couple little things that need to get tweaked. So we got the booklet of all the kind of rules and all the instructions on stuff. Well, we got a new what do they call it? Like a split unit AC installed like a year and a half ago. That impacted the thermostat we had. So I just had to swap out a page because if someone caught that for me. Hey, this isn't how you use the heater. Okay, great. Let me change that for you. So once you make that initial investment, it's totally worth it. And particularly, like, I know, Melissa, you offer a lot of tools to a lot of your clients that will help make it very easy. Like, from here's the best stuff you should buy for each room to here's some example templates. And then, of course, you can make it yourself. But even with AI nowadays, I bet there's even an opportunity for us to update our stuff by just throwing all the things in and making it even sound a little bit better. But I think once you do that, it is time well spent. And the feedback that I've gotten based on things that are, again, it's a template. I really appreciate you checking in. I'm like, oh, it was an auto send. Great. I'm looking really good.
Exactly. It's shocking to me how many hosts don't do that. And so when we can look that much better than everybody else out there and make their experience that much better and really give that care. And I think that's what separates, going back to why I chose and why you chose to self manage, versus handing it over to a property management company, is because I think that personal attention is missing from the property management side.
Completely agree. I'm actually staying at an Airbnb this weekend on the Oregon coast. And it's very clear that the check-in info came from a property management company, pretty sterile. Also, it was a lot of interesting feedback like that I would offer if they I don't think they'd care, but it was literally a list of all the things that they don't provide, which is such an interesting approach, right? So I instead of saying, "Hey, we offer like one roll of toilet paper and one roll of paper towels," they're literally like, "We do not offer anything but one." And more. So it's like, I literally just was basically reading this whole thing of no, no, no. They don't have coffee filters. They don't have spices. I just thought that was it's setting me up to be, I don't know, it's like a deficit narrative. That's me.
Right.
I go, that is a really interesting approach. But I guess my expectations are low, but I don't think that's how I want people to come in either. Right.
Right, right. Yeah, it's like you can set their expectations really high and then they get there and they're really disappointed. Or you can
Right.
set their expectations really low. Maybe that's what they're doing. So you get
I
there and you're
guess
like, "Oh my gosh, this is better because they set the bar so low."
maybe, but I'm just like, they could have done it in a different way because it's even like they said, we don't provide any spices except for salt and pepper. But you could have just simply said, "We provide salt and pepper." You know what I mean? Like, that is like, "Oh, great. Okay, good, cool. I don't have to worry about salt and pepper."
Right,
Anyway, and also was just like, how hard is it to just actually have 8 more spices? Um,
right.
again, that is to me, I'm walking into a factory. Like, I'm walking into now I know I'm walking into a place that won't feel like home, where I'm just simply like an invoice to them or a check, and that's fine. That's not the type of properties that I wanna run, you know?
Right, and I think that is so valid to point that out too. At the end of the day, when you're putting together your strategy, and the way that you look at and the way that I look at our short-term rental properties are a little bit different than, and there's no right or wrong, but some people are literally looking at it as transactional. This is a business
Right.
decision. We're just going to make money with this machine, and that we're never going to use the property probably. There's plenty of people that can buy properties across the country, have handed over to a property manager and just be hands off it all. And that's fine. That's totally fine. But you
Right.
have to know, beforehand, what am I doing this for? And if that is your strategy and that's what you're doing it for, awesome. But I call what we're doing, Kyle, it's a little bit more of a lifestyle asset. And
Yeah. Yeah, I like that.
we're using it as part of our own lifestyle. We want to be able to go use the property and enjoy it ourselves. And like I said earlier, the guests are paying down our mortgage for us. Every month, all that money is going towards the equity. And so there is transactional things happening and obviously benefiting us, but we also get to use the properties. We pick the properties out of love. We pick the properties because we want to enjoy them with our friends and family, and they might be a part of our own retirement plan. But then
Right.
also, it's a lifestyle we're creating that is an extension of ourselves to bring guests into that.
Yeah. Yeah, I like that. A lifestyle
Mm.
asset.
Yeah, so I think And there's so many different ways that we can invest, and just knowing upfront, very clear what your goals are and what your strategies are. And then you can make your decisions from there. I think you have to start with that first.
Yes.
Okay. So let's pivot now and let's talk about something that you did that enabled you guys to get that refund check from the
Yeah.
IRS, where the first time ever you did not have to write a check to them, they wrote a check to you. And can you just walk us through what that was briefly? You can go into as much detail or as you want to. You don't have to go through all the numbers if you don't
Yep.
want to, but just walk us through it.
Yeah. So, and you might have, I can imagine you would know more of an expert on this topic than I am, but I'll just share with you. Okay. So, for first things first, getting the real estate professional status was key, because what that lets you do is deduct any losses beyond what you made. Because if you don't have the professional real estate, you can only deduct any expenses like related to these rentals from the passive income you've received. So again, like if I made $50,000 on my Airbnb the first year, I can only deduct up to $50,000 in expenses, right? You cannot start dipping into your W-2 income at all. With the professional real estate status, you can absolutely, it's one big pool now. So you can start, if I had 100,000 in expenses, then you can deduct that 50K extra from your W-2 income. That's the game changer. So now, the good news slash, I don't know, bad news. The good news is we didn't have a ton of direct losses. So my money out each month for everything, that's including property taxes, insurance, my mortgage interest, all the day-to-day expenses. I didn't really have much of a loss, a little bit in that first year because we bought this air conditioning unit, et cetera, et cetera. But what really kicked it in for me was doing, and this was per your recommendation, Melissa, was the cost segregation analysis. Now, I didn't know a lot about it. I did minimal research. This is where I started having to ask different tax strategy people, like, do you know what this is? Can you help me? And there's firms that do the actual analysis, but you need a CPA who specializes in real estate to understand this. And I guess the most simplified way I can explain it as a layman myself is that a cost segregation analysis and effectively lets you accelerate the depreciation of your investment assets. And so then that really helps you minimize your federal and your state taxes. So it let us take this. Basically, we quickly depreciated both the rentals that we had, and it ended up with a huge kind of like, I'll put in quotes, loss for us that year. But it's fake loss, right? It's the asset depreciating faster that lets you deduct those expenses from, in this case, my W-2 income, because my husband was a real estate professional.
So that was a wonderful explanation of that, Kyle. The way that real estate works, just to clarify it, is one of the most amazing things about the tax deduction of it's called the depreciation. And so every year, generally what you do is you take the purchase price that you paid for the property and you divide it by 27 and a half years. That's generally the formula. That's the amount that you can generally take to write off. It's called depreciation on your property every single year. Then the cost segregation, you pay a company who comes in and they literally itemize every piece in that property that can depreciate in value. Basically, they'll count the outlets in the property, they'll count the light fixtures, and any work that you put into the property, anything you added, there's a number assigned to that. So they're basically adding up all those things that are essentially being used in that house. And then they give you a total and let's just say it's $100,000. So now you get to take all of that up front. You don't have to depreciate it over the 27 and a half years. You can take it up front and you can decide if you're going to use it all in one tax year, or you can use it. Maybe you only wanted to use $50,000 of that amount one year, and then you can roll it over the balance to the next year. And then you can take it that next year, but you're bringing it all forward and taking advantage of it all at once much sooner.
Yes, exactly. And that was huge. I mean, the financial impact of that was significant.
Yeah, I had 1 year on one of my short-term rentals. We did put a lot of work into that property, and when they did the cost segregation on it, I'm not even joking when I say I got over a $300,000 tax benefit or tax credit from that cost segregation for 1 year.
Oh, that's amazing.
See, so there are other ways. We're not going to get into that here, but there are other things you can do. There's the short-term rental loophole where you don't have to be a tax professional. However, one of the things too that you also had the long-term rental and we have the short-term rental. And so again, it just goes back to deciding what is best for you and which one you qualify for is talking to a tax strategist and they'll advise you which route is going to be the best for you to take. And then also planning for the future. So now that you've done that and you now you know what it takes. So what are your next goals? I know that just talking to you recently, I know that there are other ways that you have been investing passively in real estate. And again, that's what the whole point of this podcast is how can we invest as passively as possible so we can free up our time to spend our time doing whatever we want to do. And so I know you've been involved a little bit in syndications, and I think you've lent
Yeah.
some money for real estate flipping for notes.
Yeah. Through my finance guy, like I'll be given the opportunity to invest in oftentimes they're like really large, maybe residential properties. Like it could be like large condo complexes or apartment complexes. Some of it's been commercial, but lately that hasn't been as like lucrative for I think kind of obvious reasons. But so I have been able to invest some money in like these bigger, I guess, yeah, syndications. The other thing that I found was pretty helpful is in order to buy one of our properties, I ended up selling some stock. And then, of course, that comes with a big capital gains hit. But then I was introduced to an opportunity to invest in what's called a QOZ, a qualified opportunity zone. There's a lot of kind of like rules, and you need someone who knows exactly what that is. But what it lets you do is, let's say I sold, just for math, if I sold $100,000 worth of stock, I'm going to probably get hit with probably like 45, 50K in capital gains tax. It lets you actually invest like 50K, whatever the tax would have been, into a qualified opportunity zone. So this could be an area, I think my first one was somewhere in Michigan, an area where the like federally it's determined they want to reinvigorate certain cities and they want to actually build real estate to help fuel economic growth. So they'll let you as like an investor take what would have been a capital gains tax and instead put it into another real estate investment. The returns won't be as high as like something like maybe something else, but it's not, I'm not just paying it in taxes. That's what I think is so cool about these types of things. But you just have to make sure you align yourself with a really strong like finance person who has the real estate knowledge. A lot of times I find people are in their lane and that's okay. But then you have to have a lot of different people, right? And validate the different things that are coming your way with multiple people. Because if someone doesn't know about it, but they know about some other kind of investment. So have a really strong like board of advisors that you can be like, hey, Melissa, what are you seeing out there? Okay, great. Talk to my finance guy. He doesn't understand it. Find someone else. Kind of just triangulate all of the things that you're hearing and get multiple sources to like help you come up with a solid plan.
Yeah, and it's interesting. That's literally what the wealthy in this country do. The big families, the generational wealth families, the Rothschilds, and then those of the world. There's a lot more than just them, but they literally have an office, and it's called the family office. And that's what they have built. They have built that advisory team to maintain their wealth. That's the goal. Their number
Right.
one goal is usually not even to grow the wealth, it's to maintain the wealth. So you're essentially building your own family office in this regard where you are building that board of advisors and people that can continue to help you maintain or grow your own financial freedom, your own wealth.
Exactly. Exactly.
That's really cool. Okay. So let's wrap it up, Kyle. This has been, I think, so many golden nuggets you've shared with us. And I'm sure everybody is just taking notes and are going to save this episode to re listen to it again. What are your goals going forward? Where are you at right now? Are you thinking about adding more real estate to your portfolio? Would you add another short term rental? Do you want to do long term? Do you have any goals with real estate in mind, or are you just happy where things are at now?
I'm really happy with where things are at. I did make the decision, the personal decision at the end of last year to leave my corporate job. I'm giving myself this year to figure out what does the next chapter look like. I know it will continue to include like a portfolio of real estate investments. And I'm just looking at the different opportunities. I know I want to continue like investing in real estate and getting creative with that, but I don't know exactly what the future will hold.
Yeah. What an amazing opportunity where you were able to take this year off and know that your investment properties were bringing in income. And if you needed that income or were needing to tap into it, you built that. They are cash flowing.
Oh, yeah, that's huge. Like just knowing that they're not costing me anything and they're actually bringing in, like I'm building up. Like I see that little account. I'm like, okay, great. If I need to dip into that, I can, which is a really great feeling and very empowering feeling.
Absolutely. And I think that last word you just said, empowering, I think that for me, that's the feeling that I have felt most. And that's the feeling I want everybody to feel. That's why we're here is we need to empower ourselves to have that control over our own financial destiny. That's going to look like a million different things for a million different people, but being able to take that control back is very empowering.
Yeah, absolutely.
Thank you, Kyle, so much. I appreciate the time
Oh,
here
great.
today.
Thanks for having me. So
Yeah.
much fun.
Yes, absolutely. And I guarantee we're going to be doing a couple follow-up episodes. We're going to dive a little bit deeper into some of these things. But thank you again today. And I will be talking to you probably later today. I'll be texting you.
Okay, awesome. Talk soon.
Bye, Kyle.
Bye.
Thank you. I absolutely love that conversation with Kyle. And I think one of the biggest takeaways from that conversation was her continual search for answers. She didn't get discouraged when she would talk to somebody and they may not have had the answer for her or didn't really understand what she was trying to do. She stayed determined and knew that it was possible. She just didn't know how it was going to be possible for her, but she kept on looking. And one of the things that I wanted to focus on here was about the tax benefits that a high income earner like Kyle would be able to take advantage of. And when I say take advantage of, I like to replace that word with get to use. Sometimes we say take advantage of or loopholes, but there's one thing that I know to be true. The tax laws are for everyone, and everybody should have the knowledge to use them. That's why you're here listening to this podcast today, to learn the knowledge that we were not taught in school so that we can use these real estate tax laws the way they're supposed to be used. We just have to know what they are and how to use them. If you like what you heard today and you want to continue your real estate education, hit that subscribe button and maybe share this with somebody that you think would find it interesting. That's really going to help me grow this podcast. Join me as we learn how to make real estate investing as passive as possible. My goal is to take the overwhelm out of real estate investing so that you have more security, time, and freedom. Thank you again, and see you on the next one.